Okay, so let's talk about maybe you're a beginner trader. You're starting off. What do I recommend, or what I would recommend for anyone who's starting off as a beginner, who's learning the ropes and the concepts to be able to understand how to trade, and you have a goal of making $200 a day, and you have a very small account. So let's say you're starting off with $1,000, and you're looking to say and ask yourself, is it possible to make $200 a day on $1,000? It is, but I would definitely recommend trading the micro E-mini futures. It's a great opportunity, okay? Do not try to trade the E-minis straight on. Trade the micro versions of the E-mini futures. What are the downsides? The tick value is smaller, but it's all about compounding and accruing an account size and allowing that account to grow so that you can have a larger account to be able to trade more into the bigger accounts, okay? Or, some of these bigger instruments or contracts is what I'm trying to say. And be able to trade more contracts if you choose to. So let's say you have $1,000 and you make $200 a day in profit. Okay, now you're going to have to do some finessing to make $200 a day, because if you think about it in terms of how much money are you going to risk of that $1,000, I don't recommend risking more than 5%. Okay, so if you're risking 5%, well, you say that's only $50 that I can risk or lose on any given trade. Trade the micros, yeah, it's definitely doable. Okay, especially if you're trading and aiming for maybe 10 points at a time. Okay, so in reality is if you can only risk about $50 on $1,000 account, when trading the micros, it's like for example the Nasdaq. I'm going to show you an example here. Let's say we have, we're aiming for 10 points at a time. Now, my goal is to try to get about 20 points on a trade, but it's all going to be dependent upon price action. So let's say 10 points, okay? Because 10 points is fairly easy to get off of each scalp on the Nasdaq. So on the Nasdaq, if you do 10 points, that's 40 ticks, because you have 4 ticks in every point. So that's 10 points, 4 ticks in every point. That's 40 ticks. Now, if we do that times the tick value size of the micro E-mini futures, it's only 50 cents a tick versus the full on E-mini futures. Okay, so what I'm trying to say is start small to get to the bigger accounts. Okay, or the other bigger instruments. All right. So 50 cents a tick. That's $20 that you would make. Okay, by getting or earning those 10 points, all right? But that's on one contract. So let's talk about that, okay? So how many contracts in total could I trade if I only have $50 to trade with on the day, okay? Or per trade on $1,000 account? Roughly about 2.5 contracts. So let's say 3 contracts, okay? So that's like $60. It is definitely doable. So you could do this, but the goal is to try to make $200 a day. So you may have to take a couple of scalps, okay? Maybe 3 scalps, all right? Lots of times you hear me talking about taking 1 trade a day. Yes, you can do that once you start building up that account, all right? But imagine this. Picking up $200 on the day, or even $100 a day. $100 a day is going to give you an extra $2,000 a month. You started off with $1,000. Now you've made $2,000 over the month. Now that $1,000 has grown to $3,000, and you do that in repetition each month. Let's say for 3 months, okay? So now the first month, now you got $3,000. The next month you do it again, you got another $3,000. That's $6,000, and then the third month you then brought it up to $9,000. It is definitely doable. And if you think about it, in reality, you're only risking small amounts of money. So in this example here, I would only be, leveraging my account at about 5%, right? All right. So I'm looking to basically make, in this example, say $60, right? Because I'm gonna trade 3 contracts, all right? Because that's what I can pretty much risk. $60, right? Well, I'm gonna have to go in for about 3, setups to be able to get close to that $200, all right? Three setups are going to give you that 180 mark, right? But that's only on 10 points, okay? So maybe you're able to capitalize 12 points or 15 points, or maybe get to 20 points, right? So then it becomes you're bumping down as far as how many actual trades you actually end up having to take, if that makes sense. But if you're aiming for $200 a day on $1,000 account, it is definitely doable, okay? Just think about it like this. Even if you end up taking 4 setups, right? You're only risking $50, okay, to try to make $50, all right? And $50 is not a lot that you're actually risking on a $1,000 account. If you end up losing the $50, you can make that back up. You can make it up a lot quicker than allowing yourself to go on a drawdown and getting hit at $100, $200 a time, okay? For those that do not practice proper risk management in relation to or in regards to your actual stop. So if you get stopped off, or stopped out, you only lost $50, right? But if you can do this and you know what you're doing and make $50 a pop, $50 a pop, $50 a pop, 3 or 4 times, you're at that $200, okay? All right, so you can do this daily. So $200 a day will grow to, at the end of the week, $1,000 times 4, a little bit over. There's a little bit over 4 weeks in a month, about 4.3 weeks in a month. So let's say anywhere between $4,000 and $4,300 or $4,500 a month. Okay, by that third month, you've then moved or grown, by taking $1,000, possibly up to $12,000 to $13,000. Okay, but the issue is most people they're not patient enough and consistent enough to watch an account grow. If you are getting into this and you only have $1,000, and you must have the mindset to understand $1,000 is not going to grow to $10,000 overnight. Okay, you're going to have to do it in repetition on a monthly basis. You will get there. So just imagine taking 3 months of your time with only $1,000 and growing it to $12,000. Now you can do bigger things. Okay, now you could possibly step over to the to the full-on Emini contracts or instruments and start trading the larger contracts. The micros, guys, the MNQ, the MES are great opportunities. And there's other markets. There's other micro markets like commodities and the currencies. There are other markets that you can trade and do the same thing with. I'm only talking about the NASDAQ here. I'm just giving you a rough example of what you can actually do with $1,000 and grow $1,000 to $4,000 at the end of the month, or $5,000 really, because you started with $1,000. Now you're growing to $4,000. Now you have $5,000. Okay? So you do that by the third month, 90 days out, you should have at least about $13,000 in your account. $4,000 you've compounded each month for the 3 months, and then the $1,000 you started with. Okay, so hopefully that makes sense. I'm going to show you just in general what you really need to do and focus in on when it comes to the charts. Charts look different depending on the market, but the concept of market structure is all the same. Understanding the breaks of structure with the market, and what is that? Just the market making higher highs and higher lows, but you have to understand how to identify the reversals within the markets too. When it comes to trading supply and demand, because people, get into that now, maybe asking like, what is it that strategy-wise I'm trading? Supply and demand. That's what 98% of the time is what I'm actually trading. Time and time you may see me take a support or resistance setup, but I don't talk a lot about that here on this channel because supply and demand is the cornerstone to actually how I trade and is the strategy in which I break down using multi-charts, okay? 2 charts primarily, my 120 range, using that to mark up my first zone. And then I move down once I've got my first zone marked up on a higher base chart, whether it's supply or demand zone, I move down or scale down to a lower base chart to find my entry point. As simple as that. And I talk about that like probably more than 75% of the video content here on this channel is just kind of going back, talking about the strategy over and over and over and over. Why do I do that? Because some people may say that's like beating a dead horse. No, it's really not, because because we have new people that are coming to the channel all the time. Okay. And also I know people, learn at different paces and different curves and things like that, and reiterating things, and maybe twisting it a little bit, but going into deep detail about strategy and how it works and explaining it, what I'm looking for, things like that, and people hearing it multiple times, it really starts to resonate and set in. So hopefully that makes sense to some people. Some people can see it maybe the first time, second time, and then be on their way to making profits. In this community, we've had plenty of people who have done that. All right. So it's a great community. And if you're interested in joining the Discord, it is free. I'm going to say that now. The link is down in the description portion of the video. If you want more detailed information to where I break down trades that I actually post over on our Discord, so basically getting behind closed door, behind the curtains information in reference to where I place my stops at, profit targets, going into detail about market structure in relation to the setups that I take, and just also getting the video playlist and also getting that great video that I covered surrounding market structure, you may want to become an elite channel supporter. You may be saying, well, what's that? There's a link down in the description portion of the video to where we can click on, okay? And that link is going to give you direct access to that additional video content. It's only $6.99 a month. That's all it is. Just think about it. A very inexpensive amount that can lead you or land you into a future of something that may be very, very profitable for you, even if you want to do it part-time to make an extra $200 a day. Just think about it in terms of that. You may want to start off part-time right now, but once you learn and you see over time that you become more profitable, you may want to say, you know what, it's time for me to start pursuing this from a full-time standpoint, okay? All right, so there's big, there's big opportunity when it comes to trading the future markets and investing. People in general who are extremely wealthy, they may have created a company, but majority of their wealth has come from taking their money that they made and reinvesting it back into the market. That's where the big money comes into the picture at. So I just want to talk about that. So what I do on a chart basis, okay? You may say, well, is he going to get into what he's talking about? Yeah, I mean, I'm talking about the majority portion of it, about taking $1,000 for anyone that's been asking, because people always ask that. I got a little bit of money to trade with. Okay, what do you recommend? What should I do? What market should I start with? I would particularly start and trade with the equity markets, like the indices. Okay, the Nasdaq's a good market. If you don't like the, how fast it is, a lot of people say that, then maybe trade a more slower market or a thicker market like the ES. But again, what I'm looking at is structure, first and foremost. That is the most important thing. What are we doing? I'm looking for big runs in the market to where the market is making aggressive pushes either to the upside or downside. Like right here, this was a nice push up, a pullback, aggressive buying. Anytime you see multiple candles where they've broken and taken out a high, this is the breaker structure, after taking out a high, the most recent high on a pullback and then breaking higher, that is a beautiful breaker structure. Okay. Out of that, if you can find one, or if there's one attached to it, could be a beautiful demand zone resting on the inside of the big breaker structure, the swing itself, okay? Right here. That's why I had this marked up yesterday. The market didn't come back to it within the session here. So if it comes back to it now, would I be interested? I don't know. I mean, really, paying attention to price action. I'm right now more so having a bearish mindset because we're breaking structure lower right now. So, and because this is an older zone, I'm not saying the market can't react to this, because it definitely can, because this was an aggressive area where lots of buying took place. The number one thing that I do before marking up a zone, I have to see an imbalance back at the zone. Okay. That's the gap at the zone, because that makes up the difference of a trade being low probability or high probability in my mind when it comes to the setup. Because where there is an imbalance there, or where there is an imbalance resting in the market has to fill those areas. Those gaps is exactly what it sounds like to be. When the market has gapped up or gapped down and it hasn't come back to fill that area, all right, in between candles, those could be orders resting on the books the way my mind reads it, or and when the market gets there, 9 times out of 10, it's going to have some type of reaction there, okay? Because it's just filled in a gap to where this was a bullish area. It could react right here, and we may see some buying if it comes down and taps this zone when it comes down. Again, push up, pull back, aggressive buying. As you can see right here, what took place? Out of the area of aggressive buying, where there's a gap attached at the zone, imbalance resting at the zone, you're going to see some reaction. What took place when they got there? Rejection. Rejection, pushed up, took out the high. They took out and ran liquidity to the upside. So I'm just looking at market structure. That's the first and most important thing, is to identify which way to trade first and foremost. Once you have identified the market direction and the sentiment, meaning are we very bullish coming, is the market's pushing higher, then like on big plays like this right here, when you see aggressive areas, picture the market this, picture these swings. I want everyone to be able to do this in their mind or their eyes on the chart when they see this. Is there a big push where the market took out a high? If there is a big push, then this is a great breaker structure. Okay, simply put. Is there a big push? Pulling back. Is there another great push? Okay, where the market broke up with maybe say multiple candles? If so, this is a great breaker structure. Out in areas where there are big pushes, either to the upside or downside coming out of swings, and the market broke structure, those are areas where you're going to have beautiful demand or supply zones resting at. Okay, just like right here. Push down, pull back. What was this right here? A great push to the downside. Lots of red candles, right? So I would be looking for, well, in this setup right here, this is low probability, because this candle here, this candle right here, which created the gap, not the gap, that broke below this area here, this bottom end, this last bullish candle to the upside, this candle here came back and closed the gap back at the zone. Okay, so when the market moves down and it breaks below a certain area, and then it comes back and fills what could possibly be a supply zone, and it is still a supply zone on a higher base chart, but it's a low probability zone because there is no gap attached to or imbalance resting back at the zone. But this is a aggressive selling breaker structure. Pull back, aggressive selling to the downside. okay, where the market broke below this area structure right here. That's why I have this right here marked up. So I'm interested in seeing what's going to take place here because there's aggressive selling coming to the downside. I'm looking for great pushes coming out of a swing. You know, a one candle break to the upside, maybe say for example right here, this candle here broke to the upside right here. I'm just showing you an example, and there was no follow suit. Would I be interested in maybe trading this? I would be a little bit more leery because this wasn't technically the best breaker structure, even though it is a breaker structure. I classify that as a slight breaker structure where there's not a lot of bullish momentum to the upside. I want to see strong pushes, either up or down, that broke through that swing, that took out that high or a low, breaking through an area structure. So just keep your eye on those big pushes, okay? And where we're talking about, okay, supply, demand, aggressiveness of buying and selling, breaking a beautiful area structure, and they'll look to see if that imbalance is resting back at that zone. Mark it up on your higher base chart. Move down to the lower base chart like I talk about in so many videos as far as the third step, what to look for. We're always then at that point is looking for a smaller, either supply or demand zone, depending on, you know, which direction you're trading. If this was a demand zone, then I'm looking for a smaller 24 range or whatever your lower base chart is, zone on the inside of the higher base zone, waiting for the rejection to go in the same direction or move in the same direction to the upside. So I'm looking to go long here. I would have been looking for a pullback to this area, okay, that I've marked up at this high probability zone, move down to my 24 range, or maybe you trade time-based charts, maybe you're using a 5-minute chart. And I'm not saying that range of charts are comparable or comparable to time-based charts, because they're not. They're calculated differently. For all those that always ask, they're not the same, and you're not going to find one that's going to be 100% exact to the, you know, and movement based on price action or to the T when it comes to the candles. You know, across the board, you may find some similarity in having to play with, you know, things when it comes to, you know, size of charts and things like that. But I don't know when it comes to, I'm just saying, maybe you use a 60-minute chart and you trade off a 5-minute chart, you know. I use 120 and a 24 range chart. Again, I'm not saying they're comparable to one another, okay? But anyways, this is what I do each and every day. Seriously, I'm saying this. But I'm going to say this. For anyone who's watching this video right now, the number one thing that I need for you to do is be patient. Wait for the setups. Don't try to force the envelope, because you probably experienced this in the past. The more you force the envelope, what happens? You start blowing accounts. You start wasting money, throwing money out the door. Be patient and look for the greater opportunities, the better setups to actually take. That's what I'm getting at here at the end of the day. And you can do this from the comfortability of your home, whether you're on a desktop machine or a laptop. We're looking to scalp for $200 on the day, trading the micros. This is how you get started to grow your account size. So hopefully that resonates. And just, you know, if anyone out there who's really wanting to get started in trading, this is an opportunity with taking $1,000 and allowing it to grow. But do so with the micro E-mini futures first. Outside of that, that's all I have, guys. I just want to thank everyone for continuing to watch the video content. I do this for a reason, because I want to see people become successful. This is the reason why I do it each and every day. I make this video content. Some of it, a lot of it is redundant, but we've got new people that come. Okay, so you know, and I'm each video I make is like basically a refresher to people, because I know sometimes we take away from the machines or take a break from the machines. We get back to it. We have to go back and figure out things again, in a sense, kind of, you know, refreshing ourselves. So trust me, I know. When I spend time away, I have to get back, and it's like kind of not say relearn it all over again, but getting back and kind of refreshing myself. I take a week off or 2 weeks off, go on vacation, whatever it may be. I got to come back and say, okay, where did I leave off at? Let me take a look here. You know, I'm always constantly doing my homework when it comes to the markets and looking at trying to read structure. Okay. But outside of that, if you're interested in joining the Discord, I'll say it for the last time. The link is down in the description portion of the video. If you want to become an elite member, okay, elite channel member, it's only $6.99. You say, what does that give me? It gives you the breakdowns to all the, well, I say all, but to the trades that I take that I post over on the Discord. I break them down so that you can grasp an understanding of the setups that I'm taking. I go into detail, talking about structure, giving you the full-on mindset of why I took that trade, where to place your stop at, where to place your profit at. You also receive the video playlist, and one of the bigger things that you receive is the video covering market structure, because a lot of people, they struggle with that concept. And until you get that under ropes, okay, and grasp of understanding that one concept, you're going to struggle. Okay, you may get lucky several times. Okay, 5, 6, 7, maybe even 10 times, but at some point you're going to blow your account. All right, so I just want to say that and leave it out there. Again, the link is down in the description portion of the video. $6.99. Most people spend that on the price of a cup of coffee a day or more. Okay, so we're talking about something on a monthly basis that can be game changing for you for pennies on a dollar a day. All right, the link is down below. Outside of that, that's all I have, guys. I appreciate everyone taking the time to watch the videos. If you're not a current subscriber, please take the time to go ahead and sub by clicking on the subscribe button. Make sure to turn on your post notifications so you do not miss any of the uploaded content that I drop on pretty much on a daily basis. And last but not least, if you can do me the biggest favor, please drop a like by clicking that thumbs up button right now before you click off on the video. I greatly appreciate it. It helps the video content get out to where it needs to go for people who are seeking this information. Take care. I'll see everyone in the next video. And if you're trading today, guys, please be very safe because this is FOMC. Today, I only took one little scalp so far today, and I told myself I'm probably not going to, spend too much time in the markets. But I mean, other than reviewing and taking a look to see what's going on and engaging in the community. But outside of that, I'm pretty done for today because you guys already know most times I cut off around about 10:30, 11 o'clock. So, but anyways, outside of that, take care. See everyone in the next one.